Small and medium-sized enterprises, SMEs, represent approximately 90% of Africa's entrepreneurial fabric and generate between 60 and 80% of formal sector jobs. They are the continent's main source of wealth and job creation. But this growth is limited by the obstacle of funding, with an estimated deficit of more than $331 billion. Better structuring of African businesses would help to resolve this problem. This is what experts at a recent conference in Benin explained to our correspondent, Euloge Aidasso.
SMEs, small and medium-sized enterprises, are the primary engines of job creation and wealth generation in most African economies. Despite numerous initiatives aimed at helping them thrive, many obstacles continue to hinder their development.
Several guarantee funds have been established, yet only about 20% of SMEs have accessed financing through these mechanisms. Venture capital funds were created but quickly disappeared or shifted toward reinvestment capital as they struggled to find risk-free opportunities in the SME space.
Access to finance remains one of the biggest barriers, particularly in the context of Africa's urgent demographic transition.
By 2030, there will be more young people entering the labor market in Africa than in the rest of the world combined. And by 2050, this trend will only intensify. That's the real challenge. In Benin, 90% of companies are SMEs. If we want to create jobs, it has to happen through SMEs, not the state.
For many financial sector actors, the problem goes far beyond access to capital.
The biggest challenge isn't just financing, it's structural. Does the entrepreneur have the skills needed to manage their business effectively? Do they have the skills or know how to efficiently use all available resources to successfully manage the business? If I'm supporting an
Many SMEs choose to remain informal, often avoiding tax declarations, a stance that disqualifies them from financial support. At the same time, there's a serious information gap. Many business owners don't know how to access financing or what financial products are suited to their stage of growth. Loan conditions often don't match the reality of small businesses. You're asking a fledgling SME to provide collateral or a lend title? That's a tall order. Financial institutions are also reluctant to lend because they don't fully understand the sectors in which these SMEs operate.
If I'm supporting an SME whose only asset is the equipment I financed, and I can't even use that as collateral, we have a problem.
Microfinance institutions, banks, and SMEs alike are finding it increasingly difficult to recover loans. Regulatory pressures, especially limits on portfolio risk, make it even harder for banks to continue extending credit to this segment. But there are actionable pathways forward. First, we need to build the capacity of SMEs. That means the full managerial training to help them manage their businesses properly, produce financial statements, and generate reliable information. Because when financial institutions approach them, the issue of data reliability often arises.
We need entrepreneurs who are truly competent, able to manage a unit that generates value. If your business is well structured, securing financing shouldn't be too much of a problem.
SMEs also need to be precise in the requests they submit to financing institutions.
First, what kind of business do you want to run? In which sector? What will the loan be used for? Will the activity you're investing in generate enough cash flow to repay the loan regularly? That's the real question. Ideally, you should seek guidance from support structures that specialize in this area today. We have business support centers and certified management centers. If the business is built in a way that guarantees profitability, yes, there's always some risk involved, but the banker can take that risk with you.
To improve SME access to finance, financial institutions must adapt their products to the specific needs of this business segment. We need flexible financing mechanisms because the challenges aren't the same, the needs aren't the same, and the sectors aren't the same. Each one has its own specific hurdles. I also believe that the institutions offering these products must proactively reach out to SMEs and present their solutions. Strengthening managerial capacities, improving the structure of financing applications, and adapting banking products. These are just a few of the many pathways to enhance the development prospects of African SMEs. In return, this means a thriving pool of private sector jobs and steady growth in tax revenues for governments.